Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Tether is retreating from South America. The stablecoin issuer has cut power to its Uruguay Bitcoin mining sites. This move halts a $120 million expansion project. The decision follows a contract dispute with state utility UTE. It signals growing regulatory friction for crypto infrastructure in emerging markets. Meanwhile, a different sector is seeing massive capital flows. Jeff Jenkins of Bernhard Capital Partners identifies a rare 20-year window for private equity. Investors are targeting regulated utility assets. The driver is not policy, but physics. Artificial intelligence demand is forcing utility sales. Power grids must expand to support data centers. This structural shift creates a long-term bull case for energy infrastructure. On the macro front, trade tensions are rising. The US and Canada are engaged in a tit-for-tat tariff escalation. This risks a broader trade war. The fallout will impact GDP growth and inflation metrics. Cross-border supply chains face immediate disruption. Companies must prepare for higher input costs and reduced margin stability. In related news, energy prices in Asia remain static. CPC and Formosa Plastics have held retail fuel prices steady in Taiwan. This contrasts sharply with S&P 500 gains. It also diverges from shifting Fed rate expectations. The disconnect suggests regional supply gluts or government subsidies are buffering consumers. Global volatility has not yet translated to local pump prices. Back in digital assets, sentiment is turning bullish. Pseudonymous analyst DonAlt projects Ethereum to reach $10,000. He also forecasts Bitcoin at $90,000. These targets rely on technical resistance breaks. The analyst cites shifting market sentiment as the primary catalyst. However, he warns of overbought signals. Traders should watch for potential pullbacks before these levels are tested. Looking ahead to today's release, the economic calendar is notably quiet. There are no major high-impact releases in the next 36 hours. This absence of data allows markets to digest recent geopolitical and sector-specific news. Without fresh inflation or employment figures, price action will likely follow technical levels. Investors should monitor crypto volatility and utility stock movements for direction. The interplay between AI-driven energy demand and crypto mining constraints is key. Tether's exit from Uruguay highlights the risks of relying on state utilities. Conversely, Bernhard Capital's thesis suggests private equity sees opportunity in that same friction. As utilities are sold to meet AI power needs, crypto miners may face higher costs or exclusion. This structural realignment favors regulated energy providers over speculative mining operations. Trade war risks add another layer of uncertainty. Tariffs between the US and Canada could ripple through global markets. While Taiwan's fuel prices hold steady, the broader energy sector remains sensitive to geopolitical shocks. The lack of major economic data today means markets are pricing in these narratives. Any sudden news flow could trigger sharp moves in energy and tech stocks. Investors should remain cautious. The bullish crypto targets are ambitious. The utility investment window is wide but requires long-term capital. Trade tensions are volatile and unpredictable. Stay informed. That's your market briefing. Follow Rumour with AI for daily market intelligence.